Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A bearish opening black Maribozo and second bearish black crow yesterday. This was the result of the market rising and hitting from underneath the 50% Fibonacci line of the January 2021 to September 2022 move at 109.44, which had previously capped the market on a closing basis. We are still within the March to date bull channel, currently at 106.62 to 111.38, highlighted in bright red on my daily chart. Below we have the flatlining short medium moving average, currently 108.80, and the flatlining medium moving average, currently 108.05. Whilst above we have the congestion from late April and early May, from the 50% Fibonacci line up to the interesting and influential neckline of the July 2017 to November 2018 move, currently at 110.90, highlighted in dark blue on my daily chart. This neckline capped the late April and May highs and allowed the construction of the mid-March to date bull channel in the first place. So far today, a small move down towards yesterday's lows, but not making it, instead turning higher towards the 50% Fibonacci line again. Cable, AK sterling against the US dollar. A bearish harami yesterday as the combined effects of the November 2020 low at 128.52 and the upper bull channel line, currently 128.50, of the early April to date bull channel, which had recently capped the rise. What is also interesting about this upper trend line is that this week it intersects the November 2020 low at 128.52, and then next week it intersects the more powerful looking July 2021 to date optimized downtrend, which you can see angling down in dark blue on my daily chart. That's currently at 129.07. Thus, if there is to be an attempt higher, then later would seem better than right now because of the combined forces overhead. Below we have the interesting 50% Fibonacci line of the June 2016 to September 2022 move at 126.99, plus the September 2020 low at 126.72. This pair of resistances turned supports had capped the market back in early to mid-May, so they appear significant. Now, so far today, a small dip below the lesser Fibonacci line at 127.72 before a pullback to just over the lesser Fibonacci line. Euro sterling. An indecisive spinning top yesterday, but it was also a bullish harami and the lowest low since August last year. Despite two clear closes below the significant November last year low at 85.45, this market still won't let go of it. It continues to highlight the confusion the market has been having of whether to go lower or retreat back up, and in the end trying to do all the things at the same time. So far today, a slightly lower open, but then a move up over the 85.45 area. I'm beginning to wonder if we have a 3-day bullish morning star pattern in construction here. US dollar against the Indian rupee. A bearish engulfing pattern yesterday, if only just, which wasn't that hard to do as the previous session was an indecisive doji cross. However, it was a smaller range than the previous session, which is not exactly encouraging for the bears out there. The overall range, that is, not the actual main range. However, it was also a second full session below all the moving averages. Overhead, we have the slowly rising long moving average, currently 82.08, the flatlining short medium moving average, currently 82.17, and a very slowly rising medium moving average, currently 82.27. So, with all these overhead resistances and limited supports below, you'd think we might see a move lower. However, I suspect the reason we have not seen prices try much lower was because we have an early May piece of closing based congestion between approximately 81.65 to 81.80. Overall, this continues to be part of a pullback from testing the overhead broken upper time, currently 82.51, of the October 2022 to January 2023 mildly bearish shift pitch, highlighted in dark green on my daily chart. Separate to this, the main recent feature remains the recent bow time formation of the short moving average, currently 82.33, the short medium moving average, and the medium moving average. This triple crossover pattern sets up the opportunity for a move higher, as the moving averages went in and out of the bow tie in the right order and are mainly pointing higher, or were mainly pointing higher. The theory indicates that between 20 to 25 sessions after the crossover, we may see a move in the direction of the bow tie as a result. Thus, between today, the 20th, through to the 27th of June, look out for such a potential move. We also have, though I'm perplexed by its lack of influence here, the ascending triangle formed between January to March, highlighted in dark blue. The market continues to have difficulties in interpreting this pattern. So far today, what looks right now like a combined bullish engulfing pattern and bullish opening white Mariposa. Today's action has already punched up through the long moving average and tested the short medium moving average before coming back down to just around the long moving average. US dollar against the Brazilian real. A bearish engulfing pattern yesterday, if only just. It was, however, the lowest low and low close since early June last year. Prices utilized the breached lower bear channel line, currently at 482.02, highlighted in bright red on the November 22 to date bear channel. There's a cap on the market, dropping down through the 50% Fibonacci line of the October 2018 to May 2020 move at 477.54, before finishing right on it. Below, we have the lesser Fibonacci line at 472.92 and the May 2022 low at 468.98, before we see the lower time, which is currently 466.37, highlighted in dark blue, of the broken late July to late September 2022 bearish shift pitchfork. Now, this pitchfork is important as it showed the bearish angle of attack way before the bear channel was created. I'll be watching the action around the bear channel with interest, as it will determine whether I should still highlight the channel or not. Sitting over all this is still the shadow of the monthly key reversal down we saw in January. US dollar against the Mexican peso. An indecisive doji cross yesterday, possibly even a gravestone doji, right on a mess of supports, made up from the core of a band of support between approximately 1703.90 to 1701.35, which has as its constituents the April 2016 low at 1703.89, plus the middle time, currently at 1702.40 of the newly drawn December 22 to March 23 bearish Andrews pitchfork, which is highlighted in bright red on my daily chart. This middle time had supplemented at a sharper bearish angle of attack the now overhead breach September 2022 to date lower bear channel line, currently at 1716.73. Now, for the moment, I'm still regarding this lower bear channel line as being breached, not broken as yet. In the mix, we have the March 2016 low as well at 1709.23. With the middle time and the breached lower time now separating, an attack on either will, of course, be easier than attacking them when they were combined. So far today, well, a small reactionary move back up, but only over the March 2016 low at 1709.23. We are still in between the overhead breached lower bear channel line and the middle time below.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.